This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending November 19th, 2022. Our question this week is, what is proof of work? The answer will be provided later in the video. This week, the market ended lower. The Dow Jones Industrial Average increased 0.59% on Friday, but was down minus 0.01% for the week. The S&P 500 increased 0.48% on Friday, but was down minus 0.69% for the week. The Nasdaq increased 0.01% on Friday, but was down minus 1.57% for the week. Looking at the week, we can see that there were 6 up finishes versus 9 down finishes for the major indexes. On Monday, Wednesday, and Thursday, all the major indexes finished down. On Tuesday and Friday, they all finished up. New unemployment claims were 222,000. Wholesale prices rose 0.2% in October. Household debt soared at its fastest pace in 15 years. Home builder sentiment dropped to a decade low. Home sales fell for the 9th straight month in October. And U.S. Treasury yields rose on Friday after Fed President Bullard suggested that higher short-term interest rate hikes were still necessary to fight inflation. New unemployment claims, wholesale prices rising, household debt soaring, home builder sentiment dropping, home sales falling, and U.S. Treasury yields rising are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up when the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is proof of work? Proof of work is a cryptocurrency mining mechanism that verifies new transactions, add them to the blockchain, and create new tokens. A blockchain is a public ledger that records each crypto transaction. The ledger can be seen by anyone who is part of the network, that is, anyone who either mines or transacts with the cryptocurrency. Crypto mining involves solving a mathematical problem. The problem is solved by a computer algorithm, so there is no human number crunching involved. When solved, a new transaction and token or coins are created. A set number of tokens are awarded to the virtual miner who solved the mathematical problem first. The network of virtual miners use a lot of energy, which is the proof of work, to create new transactions and tokens. Proof of work is a very secure way of keeping the blockchain decentralized and free from being compromised by any one or group of persons. Bitcoin is the largest and most prominent proof of work cryptocurrency. There are some companies that mine Bitcoin and sell stock, but Bitcoin is not a stock. And there are some companies that are crypto exchanges where Bitcoin and other cryptocurrencies are traded, but Bitcoin is not an exchange. Investing in a stock or crypto exchange is not the same as investing in Bitcoin. The same difference exists with gold and gold mining companies and gold exchanges or gold marketplaces, where gold is bought and sold. Gold is gold. It is not a company and it is not an exchange. Bitcoin is Bitcoin. It is not a company and it is not an exchange. Do you invest in crypto stocks? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library for free or buy cheaply online. It's not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is the Southside Trading Watch List from the week ending November 19th, 2022. The strongest performer on the list this week was JP Morgan Equity Premium Income ETF, ticker symbol JEPI. It's in the first column. It was up 0.78% on Friday, and it increased 1.26% for the week. JEPI is an actively managed fund that seeks to generate current income while maintaining prospects for capital appreciation. The majority of returns are associated with the fund's primary benchmark, the S&P 500 index, while exposing investors to less risk through lower volatility. Looking at a summary of results, you can see that JEPI has decreased minus 12.03% year to date. I did not trade JEPI this week, but I may in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio cash flow system is outperforming the S&P 500 index ETF SPY. The Southside portfolio is up 3.71% versus minus 16.62% down for SPY, a difference of 20.33%. The Southside is beating SPY by over 20%. The cash flow generated by the Southside cash flow system for this week was 4.39% of the portfolio account value. The account value changed by minus 1.14%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.62%. Bitcoin Watch. Bitcoin lost 0.14% this past week and continues to be in a bear market. It is down almost 76% from its all-time high achieved in November 2021. I sold option contracts on one position this week. It was a put that ranged from $0.00 to $100.69. You can get more details, including the total dollar amount of cash flow for the week, on the website Southside School of Financial Freedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists, levels 1, 2, and 3. Level 1 being for beginners, level 2 intermediate, and level 3 for more advanced investors and traders. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.